Hey, welcome back. Two Stupid Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about Dr. Michael Burry calling Jay Powell a damn dirty, lying, filthy ape.
That
Emotional
was serious.
damage.
All right, guys. If you like this kind of entertaining stock market content, and we're just trying to figure everything out, and this is a rough start, and we're gonna get started. I messed up. Give us a like and subscribe. I'm sorry.
Two Stupid Guys Trade Stocks.
It was so intense.
By the way, I still love this picture of Jay Powell more than almost anything else. He's just like the way he's pulling his glasses down there. It's like that meme, you know?
I think it's
Came here to
Jay
eat lunch
Powell
and screw shit
and
up.
Jack Ma. I think those are the two favorite. Jack Ma with the frown. Those are up there.
Jack Powell with the frown's okay, but I don't think it's not on Jay Powell pulling down the glasses kind of like level. But this is the tweet I want to talk about. I want to talk a little bit about what he's getting at here. Quite the rally given quantitative tightening, right? Yeah. No, the Fed's not actually doing any quantitative tightening. Basically, haha, we lied to you. In fact, they haven't reduced mortgage-backed securities, or actually they've been increasing mortgage-backed securities since the start of this QT cycle back on June 1st. We're now like almost 3 months into this whole quantitative tightening cycle, and they've basically done nothing but make it worse, actually. Fascinating, isn't it?
So, for some context, okay, it's not they. What they promised was they were going to increase rates and then stop the mortgage-backed security holdings and kind of reverse directions. They have increased rates. They just haven't done the other part.
Yeah, well, they were supposed to start doing the other part by June 1st. They laid it out pretty significantly in terms of what they're doing. So you can actually go onto the Federal Reserve's website and it'll tell you, category by category what their balance sheet is of different things every like week, basically. So you got the mortgage-backed security line here, $2.7 trillion right now, right? You kind of have to wonder, like, all right, where was it relative to, its kind of peak, or, what has been going on since this whole June 1st timeline. So just in the last week, it actually went up. So it was 2.708 trillion here. But this is 2.718. So you're talking about another $10 billion in purchases over the last 10 days. I mean, it's 7 days.
Okay, that's not
It even
super
looks
awesome.
pretty flat since June 1st, 2.698 billion prior to this whole thing. Yeah. I'm sorry, not billion, trillion. Yeah, don't forget, this is the Federal Reserve. These numbers are a whole nother level of magnitude higher. But this is actually from a Federal Reserve press release, from May, where they laid out their plan for what their quantitative tightening cycle was going to look like. So for the mortgage-backed securities, they were initially set to sell into the marketplace 17.5 billion per month for the first 3 months, just a little tease, a little taster tester, and then they were going to increase that to $35 billion. Right now we're sitting here.
Sell.
This is the sell. This is what they're offloading off their balance sheet. This is how much they're supposed to be doing. In fact, so I'm going to run through some math here for you. So they should have sold 17.5 billion in June, another 17.5 billion in July, and then I prorated August because we're filming this on the 20th of August. So they should have sold about 11.29 billion so far. And in fact, they actually increased the amount of mortgage-backed securities on their balance sheet by 20 billion. So you're talking about a $67 billion delta between where they should be based upon their plan and where they actually are. That's pretty impressive, isn't it?
It's not super awesome. Now, okay, one, very impressive research. Hand to Vinny. Let's this is not bad. Okay. Two, does the rapid increase of rates have anything to do with this? Is there a chance that maybe as they start to taper the increase of rates, they can start to work on this?
That is a viable explanation. The problem with it is that this in of itself will also move rates for mortgages. Right? To give you an idea, I have another slide here. This is looking at the issuance of mortgage-backed securities. And if you look at the time period here from the end of 2021 down through the current day, you notice it's falling rather steeply, right? The far fewer mortgage-backed securities are coming on the market. No new ones are being created at the same level they were last year, right?
Okay. Would
Makes
that
sense.
affect their ability to sell?
Yeah, right. It's going to get even worse. If you're now all of a sudden, they've built up this massive position and they're trying to sell it into this market, which just doesn't have the capacity for it because the market is decreasing, rather significantly here as far as the speed goes. Granted, like I said, these are just new issuances. This isn't actual transaction volume of old issuances. but you're still looking at the whole kind of thought process in terms of the size of the demand out there in the market. If they start selling into this, where there's just not like this huge volume, they're going to be able to move it that much more, meaning that they could put significant upward pressure on the interest rates and for mortgages, and make it even less affordable for home prices, for people to be buying homes.
Okay. Or so
Yeah.
then, to play devil's advocate here, because I'm a Jerome Powell fan, I would be the first to sign up if he started an OnlyFans, right? Immediate. Two, if they're already increasing rates, and if they, we have a diminishing supply, and they're trying to sell because they have a ton of MBS.
Yeah.
That's code. That's how the cool kids say it. Wouldn't it? I know their initial plan in January was to do both, but as a situation starts to play out, isn't it fair to, I guess, make an assumption that you have to do what's best for the time and not hold to the original plan? Because if they started to sell, this is a problem.
Yes, completely understood where you're coming from there. The kind of worry or argument that I think that you can make based on this is that although they're saying one thing, they're doing another, right? And the actions speak louder than words, right? So their actions are telling you that the economy is much more tenuous, I think, and particularly when you're talking about the housing market is much more tenuous than they are letting on.
I do
That's
agree
my
with
point.
that because
Yeah,
they're essentially saying, "Hey, we're completely fine, no recession." Like I
exactly.
100%. Okay.
Whereas they're handling mortgage-backed securities in particular with kid gloves right now. They're just like, I don't really want to mess with you too much because it's not looking so great already. And if I start doing in there like a 300-pound gorilla, it's not going to end too well either, right?
Now, you could argue Biden's administration is more giving false flags about how the recession is completely fine. I don't know if Jay Powell is.
Yeah. I mean, that was a great piece of political theater, right? Don't forget, it's a midterm election year, so different rules apply. In fact, this economy only goes up during midterm election years, as far as like logic and public speaking.
Solid.
We just shot a video on China, which is kind of funny too, because there's always the debate about how much you can trust their data. How much can you trust our data right now?
Okay. Yeah, that's fair. Oh
Point,
boy.
point taken. For those of you who prefer a more graphical representation, this is what the federal balance sheet looks like. Obviously, we saw that explosion during COVID where they had to buy up everything in the sun, and they've theoretically started, kind of doing this quantitative tightening. They have sold off some treasuries, but like I said, the MBSs are actually gone up on their balance sheet. They basically have been flat for the last several months, and they're not really doing a whole hell of a lot in terms of deleveraging, which is kind of scary in that, like, I there's not a chart I probably should have included in here, which was kind of a reversion towards what would be considered like a happy medium. In order for them to reload and get back to that happy medium standpoint where they could have the ability to go ahead and leverage up and take on a bunch of assets in order to stimulate the economy, they have to get back to like a $4 to $5 trillion balance sheet, and they're still significantly above that. So they have $3.5 trillion that they'd have to liquidate just to get back to a point where they have the same power to move the economy, and they're not able to do it right now. They're just unable to
Right.
do
So
so.
the more assets they have, the more diluted their ability to change.
Yeah, exactly.
Okay.
We probably should call this video like Jay Powell is impotent.
Stop hitting on my man Jay Powell. He's doing his best.
Yeah, and like it's not getting better too. Like this is if you actually like charts a little bit more, you're looking at this big positive number here. This is just recently in the last week on the daily basis. They're still accumulating more mortgage-backed securities. That's kind of the point here. They're not able to deleverage their balance sheet even all the way up until the end. Here is my point. They're not. Not only have they failed to do so for the last like 2.5 months, they're still continuing on a daily basis to continue expanding mortgage-backed securities and buying
Okay.
more.
What if, speaking for my man Jay Powell, they do the interest rates first for a solid 6 to 9 months, which I mean, let's say they call it in December and we hang out for a little bit, and then they work on the mortgage-backed securities. Not in any way correct with what they were saying for their plan.
Yeah.
Like the plan was not this, but you got to adjust a little bit. I don't think they also saw the whole Russia-Ukraine oil situation happening. That changes a lot. Why couldn't they start working on mortgage-backed security sales in December? And don't bring up the fact that the supply is dwindling, because that greatly ruins my argument.
No, that's actually a reasonable point. I just think, unfortunately, it's going to be too little too late. They're not going to be able to start offloading stuff off their balance sheet until we've already kind of broken the economy to a degree. Like, it's not going to be permanently broken, but to think we're not actually in a recession or facing a moderate contraction in economic growth over the next year or so, I think is rather silly from it's simply logical standpoint. We saw a ridiculous level of growth, and now we have to kind of cool back off a little bit compared to that. That's not to say that we can't then reaccelerate from that new kind of higher level that we've achieved, but I think this is difficult for them to unload right now, which is showing you, in fact, that the economy is not nearly as strong as they're trying to let on with their public face, because, like I said, their actions are not speaking to that degree.
All right. What's this graph here?
This is just MBS specifically, just to kind of break out from that previous one. Basically flat, same thing.
Okay.
The cool thing with the Federal Reserve is a lot of their data is just right out there in public. It's easily accessible. You just have to take the time to go through it. And these numbers are ridiculously large, so it definitely gets a little hard to wrap your mind around the concept of $2.7 trillion in one particular asset class.
Right. So this is kind of like the video I did with the "Don't Look Up." Right, where people are saying that the recession is not a thing, we're going to be completely fine. Yeah. But if you just kind of look at the numbers, this is a little bit of a problem. Small problem.
Exactly. Their actions are actually showing you that it's a real problem, and that that's what they believe based upon how they're acting and conducting themselves. But in fact, their public face is completely contrary to that.
All right.
That's what he called it out on.
Let us know what you think.
Yeah, see you in the next one.